Good morning, everyone, and welcome back to day 2 at the Vision Stage here at the Finance Magnates Singapore Summit. My name is Natasha, and I'm very happy to welcome you back for another day of conversations on the topics shaping the future of our industry. Today, we continue with a strong focus on stablecoins, regulation, technology, and the next phase of brokerage growth. It's great to have you with us again, so let's begin day 2 here at Vision Stage. We are opening with a session on stablecoins, which are no longer just an idea for the future. Across APAC, they are already being used in real products, real payment flows, and real business models. This session will look at what is already working, what still needs to be fixed, and what firms need to understand before they go live. Please welcome our moderator, Vidushan Primatiratne from 8 Circle and Tech Labs, and our panelists. And let's give them a round of applause as they take a stage.
Yeah, thanks, Natasha. So welcome everyone for this stablecoin from experimentation to implementation session. So during this session, we will run through the practical aspects of what is shaping stablecoins as it progresses from a question from should we engage to how do we actually go about implementing responsibility and competitively in markets where the space is now grown to just about $300 billion in circulation. We are seeing several use cases emerging around remittances, payment rails, settlement layers for RWA tokenization, and so on. So we will talk about the practical aspects today. We've got an amazing set of panelists here today. So before we get into the content of this discussion, I'll just give each panelist 30 seconds to give a quick intro about themselves. We'll start with Jason.
Hello, can you guys hear me? Okay, thank you. Great to be here. So my name is Jason, and I run sales for Signum Group in APAC. Signum is the world's first digital asset-friendly banking group. So we hold a banking license in Zurich. Here in Singapore, we have the MPI and CMS, the capital markets licenses. We have entered the EU in Liechtenstein, and we're also licensed in Luxembourg and in the UAE. So basically offering a regulated basket of services to various parties across the world, so including banks, individuals, family offices, funds, hedge funds, the like. So that's what we do, and happy to join the panel. Over to Eric.
Hi everyone, I'm Eric. I'm the CEO of AAA. AAA is a stablecoin payment gateway. We're licensed in the US, in Europe, and in Singapore. And so what we're essentially doing is helping merchants to add the pay with stablecoin as a payment option on their checkout page.
Hi everyone, my name is Alice Chen. I'm the co-founder and general counsel for InvestaX. We were one of the first real-world asset tokenization platforms in this region. We are licensed by the MAS. We hold a capital market services license, as well as a recognized market operator license to allow the trading of these tokenized assets. Essentially, I think the way I would describe what we do is we bring financial assets on chain, so we're the other side of the transaction where these stable coins come into play.
Hi everyone, thanks for having me here. My name is Tian Wei. I'm the co-founder and CEO of StraightX. So StraightX has been a payment infrastructure player licensed out of Singapore and Indonesia for the last 10 years. We're also better known as the issuer of the Sing dollar backed stablecoin more than 5 years ago, XSGD, and the US dollar stablecoin, XUSD. Both have transacted on-chain more than just crossed 30 billion on-chain transactions since last month. Also, I'm very fortunate that both stablecoin are actually recognized by MAS to be in a well-regulated stablecoin regime that they haven't pushed out since 2 years ago. These days, we've been focusing primarily on stablecoin real-world use cases and payment use cases. So we also just became one of the largest stablecoin-backed Visa card issuer as a service out of Singapore itself as well.
Hi everyone, so my name is Pamela. So I run sales in APAC for Talos. So Talos is a US headquartered company, but we have offices around the world, including Singapore and London. Right. So what we do is we are actually a leading digital asset trading provider where we serve a lot of buy side and sell side, both in the traditional markets and also crypto native markets, by allowing them to price discovery, getting the best execution in the market, onwards to execution as well as settlement, post-trade settlement, and treasury. So I know today's topic is on stablecoins, and that's really one of the use case and hot topics that we've been seeing even in traditional institutions today. So very, very excited to share about my perspectives here.
Awesome, guys. So how we will structure this discussion today, so for 30 minutes, I will more or less curate a few questions to the panelists, and then we'll more or less have 10 minutes at the end for audience Q&A as well. So we'll start off with Eric. So AAA has actually implemented your solution to a number of merchants. And as you know, merchants might not care about, what infrastructure, technology constitutes your solution. They're more or less wondering about cost, speed, how reliable it is. So what is making stablecoin payments commercially viable today compared to maybe a couple of years back?
Yeah, so the reason more and more merchants are adopting stablecoin payments is essentially to sell to the 500 million people around the world having stablecoin. And the beauty is compared to cards like Visa or MasterCard is that they not only it's way cheaper, but second, especially for global cross-border transaction, there's no risk of fraud, there's no risk of chargeback. Because once a transaction is on the blockchain, there's no way to reverse it. So that's a big benefit for merchants. So for instance, we're working, with Trip.com. So Trip.com, one of the largest online travel agents, and they are prone to chargebacks and things like this. So for them, they are able to sell across many countries where it was very difficult to sell, and they are guaranteed to receive their payment, and they're never going to have any chargeback risk. So that's one of the concrete use cases of stablecoins.
Okay, awesome. So let's get into Jason now. So in your case, you are part of a regulated digital bank. So when it comes to institutional demand coming through, where do you see the clear demand, and where is it coming for maybe the next 12 months or what compared to the past 12 months?
Yeah, sure. I mean, if you look around, globally, but here in Singapore in particular, over the last 12 months from an institutional landscape, there has been a fundamental shift, I think, in the thinking of not just stablecoins, but crypto and digital assets in general. Some people colloquially call this the Trump effect. I mean, after the US stopped attacking the industry, the SEC has changed. It kind of de-risked the asset class globally to a degree. And then you've seen things change. And one of my friends that works at one of the major banks that everyone would know here, he said, we went from active observation to immediate execution. And this is what I'm seeing in locally, but also globally. Signum Group, we work with 23 different banks globally and growing. And I think it's pretty obvious where you see the demand. I mean, stablecoins are definitely a part of the picture in terms of settlement efficiencies, cross-border payments, and programmability 24/7. These sort of things where they can gain efficiencies even just for internal purposes. And of course RWAs and how do stablecoins feed into an RWA product, which I think some U.S. firms have really taken the lead on, shown the use case. So I think there's been a significant change over the last 12 months in just the perception alone. It's not, something that maybe we're going to experiment with. It's now how do we actively integrate, into our existing products and services is what I'm seeing.
Awesome. So I'll get into Tianwei as well. So as we move from experimentation to implementation, I think based on what you're seeing, Tianwei, we'll take Southeast Asia. Where are you seeing the most prudent or active use cases coming now in Southeast Asia? I think it's nice to see the lights as well.
Yeah, for sure. Stablecoin is coming out to the mainstream lights right now. Yeah, but I think one of the things that I think regulators have been doing well. We have been very fortunate to be in Singapore, where the MAS, which is the Monetary Authority of Singapore, has been a beacon that's been leading a lot of this frontier side. But you can start seeing the Hong Kong HKMA. There's a directional conversion here that they all understand that for stablecoin to really scale, there's need to have fundamental trust, and stuff like trust takes regulation clarity over there with sensible compliance and regulation control before the institutional can really start adopting that. And that's something that you start to see both MES and now HKMAs both have already set up the guidelines into what is the underlying assets class of stablecoin. Who's the issuer? What is the license requirement for the issuer itself in terms of safeguarding of the assets? What is the accounting standards that should be pushed out there? That has been one of the things that I think regulators around this part of the world, and actually in Asia Pacific, have been leading the pack. We all talk about the Genius Acts passing since last year, but in actual fact, it's just a bill that's been signed. Implementation and stuff have not rolled out. But Asia Pacific has been leading this because Mars have really set up this framework more than 3 years ago, and we were very fortunate to be the pioneer that actually got it actually running. And another big thing that the MES has been doing quite a bit, and I think regulators around the world are also learning, is that there's a lot of public-private partnership. MES has been, Singapore itself has been famous for all the acronyms like what you call things, Project Orchid, Project Blooms, which we are very fortunate we've always been involved, where they get industrial players and some of the folks on the panel itself to be involved from day one in how the regulation can be set up, how we can have sandbox regime and environment that these things can be run, and so-called kosher and been blessed by the government before actually rolling it out at scale. So that are the stuff that I think will be a continual push that we should hope to see more regulators do around the world.
In terms of use cases, what do you see the emerging use cases in Southeast Asia?
Sure. So from a use cases perspective, we started as a payment company, and our DNA here is fundamentally still in payment. I think what we are all getting excited about the growth of stablecoin use cases around the world, like what Eric was talking about in terms of adoption, the stimulus side. Those are the first phase of technological wave that we have already seen. But what really is driving this, I think, is two catalysts right now we are seeing. Number one is fundamentally, I think the global demand for stablecoins is the global demand for the dollar. The US dollars is still the global trading currency. And accessibility for that is something that a lot of folks are still looking for. We just talked about it morning at the coffee time that having a US dollars account is still a privilege in a lot of countries that we're in. Even in Singapore right now, where we are pretty affluent and stuff, it's not actually easy for a lot of folks to get a US dollars account, to hold and save in US dollars, to trade and transact in US dollars. TT costs are just inherently expensive, right? So that, with stablecoin right now, give a global audience, like I say, 500 million people, easy access to the US dollars. That has been the first wave of adoption that we are seeing. But right now, after they be able to hold the assets, we're seeing a wave of company coming out like us, trying to give you guys a use cases around a stablecoin, right? What can you now do with a stablecoin saving account? The natural next step that we're seeing explosive growth is actually in the spending side. So yes, merchant adoption is increasing, but what have always been working that in our past experience is leveraging on existing merchant network. So we are one of the largest stablecoin-backed card issuer as a service with Visa. We are a Visa principal member. And that category have exploded really since the Genius Acts passed. We're seeing like 40x GTV growth, 80x in the number of cards issued. And Visa, during their latest financial calling, has really mentioned that last year they did about $5 billion worth of stablecoin-backed card transaction. This year is probably going to do 30. So that kind of adoption and use cases is what is driving a lot of use cases that we are seeing today.
Okay, that's great. So I'll bring, since we touched on regulation and compliance, I'll bring Alice into this conversation now. What more needs to be done, Alice, from a regulatory or a compliance perspective to make stable coins much embedded in, say, financial capital markets?
Yeah, and actually I think this is a good segue into what Tianwei just said. What are the actual real use cases, right? And I think there needs to be an alignment of cross-border regulatory frameworks. We talked about MAS being early leaders in providing a structure and framework, but I think in terms of implementation and licensing, it has been slower since 3 years ago. Hong Kong, I think they came out with the ordinance 8 months ago, and they've issued 2 licenses already. But what's interesting is there are discrepancies. What you can do in Hong Kong is you can issue, and also who they've issued to is an indication, right? These are banks or bank-related entities. So there is a bit of a conservative approach, and you are required to whitelist. This is not something that is required, if you hold USDC or USDT. There is no whitelisting. It's freely transferable, right? So I think that cross-border, harmonization of regulatory frameworks. today's actually quite an interesting day. I think most of you would have heard about the Clarity Act. It builds on the Genius Act. It was passed in the US House, and it's being heard in the Senate. The markup is happening today. And why it's important is because it's been stalled primarily because of the use cases. Can you have native bearing yield on stablecoins? That's been the contentious issue, and it's been delayed because of that. Obviously, a lot of lobbying from existing ABA, the Association of Banks, American Association of Banks, lobbying against it because they don't want it to be treated akin to bank deposits, right? And so a lot of, I think, building of regulation in parallel, but having to work through that is something that is going to be the hurdle. I think also something else to consider is, you know, what can be accepted as central clearing, right? There has been discussion in the US about using tokenized assets as collateral for derivatives. Whether that can be accepted at the CCP level is something that hasn't been looked at. Under the Genius Act, I think there was also discussion of reciprocity of other, I think, comparable jurisdictions, but whether that includes Singapore, Hong Kong, EU, is yet to be seen.
That's interesting. So since you brought RWAs into topic as well, just quickly want to touch about, do you see them stablecoins becoming a settlement layer for RWA settlements in private markets and maybe securities transactions as well?
Yeah, I think you know how I feel about this. I'm a maximalist. I see stablecoins, and I talked about this, stablecoins and tokenized assets as two sides of the same coin. One represents value and the other moves it. And so I think in some years' time, maybe not too far into the future, we're going to see these integrated platforms that will have RWAs and stablecoins settling on chain. I truly believe that, and actually I'll use an example. Another interesting piece of news that just came out this week was Circle's announcement of an ICO. It's not like any ICO, it's a publicly listed company, and they raised $220 million at a $3 billion valuation from BlackRock, Apollo, all the financial giants. And what is that an indication of to me? It's an indication that the direction of financial markets is on-chain. More on-chain assets, more on-chain trading, more on-chain revenue. Because what they're doing with this ICO is creating their own blockchain protocol rather than issuing, on third parties, Ethereum, Solana. So they're believing there's going to be a lot more on-chain transactions to be captured. So let's capture that ourselves. And all these big financial giants believe in the same thing. So I think that's a directional signal that I'm a big believer in.
That's great. So Pamela, so as you heard from Alice, the future of financial rails is going to be on blockchain. Jason touched upon institutional demand coming in from Asia. So what do you see as the bottlenecks now from a more treasury trading perspective that might be slowing institutional adoption?
So wearing my trader lens, right? I think one thing for sure is stablecoins has its use case, but ultimately you need to figure out how do you actually want to off-ramp, right, into USD, eventually, because that's still the main mode of settlement with among the people around the world, right? So I think pre-liquidity discovery, let's say if I'm a treasury team, I want to place a 50 million order into the market, right? I want to be able to see a single order book, single price book, instead of viewing 7 different price sources, right? And that's also what most of the clients that we are speaking to, especially payments provider, coming to us for, where they really need that aggregation services that we are probably very used to in FX, because that's pretty common, right? And that's really where it actually solves a lot of slippages, right? It's all about liquidity here that we are talking about. The next, after you think about liquidity, it's about treasury and settlement, right? Also because if you are dealing with stablecoins, a lot of it is on-chain. So you actually have to manage reconciliation across different settlement networks. You have to deal with multiple custodians, right? You also have to figure out operational risks, dealing with smart contracts and all of this, right? And this is actually more, I would think it's a normalization problem, not so much of a settlement problem here, right? And that's where connectivity into custodians, into treasury system, accounting systems actually make it a lot easier, because what you want is your trading teams and your treasury teams, they should be seeing the same trade records, right? It shouldn't be all manual work that's going behind. Right, and the last thing I think more so is actually around the setting up of this whole trading operations, right? Settlement execution is fast on chain. We all know that it takes seconds, but actually the speed mismatch here is actually onboarding. When I say onboarding, it's actually onboarding into counterparty venues to get liquidity, like market makers or exchanges. Those takes time, and onboarding for bank accounts. Right, and all of these actually take quite a bit of time. So that solving that speed mismatch, right, it's actually where a lot of infrastructure providers here are actually selling, I would say.
Yeah, that's interesting. So let's bring Eric here. So as you know, cross-border payments is one of the main narratives for stable coins. In terms of momentum that you're seeing, which I would say cases do you see? Is it payments? Is it more checkouts? Or is it remittances that you see momentum growing in terms of cross-border?
Yeah, no, I agree with you. The main use case for stablecoin is enabling people in emerging markets to be able to hold stablecoin, to hold dollars, sorry. And so this means that it's really when there's an emerging market which is in the transaction where it's really making sense. I am not a big believer of stable coins to send money between, I don't know, Singapore and the US. I don't think it's going to be, it's not bringing much value. The real value is what we're seeing, for instance, import-export business. So you have an exporter from Hong Kong, with Chinese manufactured goods selling into Africa. One of the big problems when you're in, say, Ghana or Ivory Coast or any of those countries is getting access to the US dollar. It usually takes days with the banks, lots of paperwork and insane fees because of all the capital control. They're just making it as difficult as possible. And what we're seeing is that it's easier to get access to stablecoins on those markets through the local exchanges, or maybe because they are themselves paid in stablecoin. So then they can buy from in my example, from the Hong Kong Chinese exporter, and that's the kind of things where it's 10 times better than the current situation.
Just to add on to what you're saying, I mean, we see a lot more demand, and this is more trade moves on chain, right? Because there's a lot of jurisdictions where it is hard, and it's just much easier, much faster to use stablecoins. But one of the issues that we find is that final layer back into, let's say, the real financial world, right? And this is where the legal compliance do have a lot of questions still in source of wealth, source of funding of in what sort of transaction, what jurisdiction. These make it difficult for a firm like us to onboard some of these clients to help them with that final leg to then convert back into, say, US dollar they might need to pay their bills or what have you, right? And this is one of the missing links, I think, and maybe a bit of a global harmonization or, I guess better global frameworks would maybe help to improve this situation. Maybe just more general adoption of stablecoins. People are more comfortable with it. Because the thing is actually stablecoins, because you have an immutable public ledger, and the forensics capabilities now that we have and that most firms that are licensed have is quite remarkable. So it's not a good way to try to do something nefarious and hide bad activities with a stablecoin on Ethereum. I mean, that would be the world's dumbest criminal, essentially. So anyway, just wanted to point out that, I mean, we see growing demand, but there are still some kind of bottlenecks in that final leg for some of the companies, unfortunately.
80% of our discussions with our clients revolves on compliance, licensing, and everything.
Yeah. No, actually, that's an interesting point. Let me add a bit to that, because still there's questions around transparency, issuer risk that is stemming as well. So this is where I think Alice could add to it as well. So what sort of standards or frameworks that is needed from this point onwards to overcome those sort of concerns like transparency?
Yeah. Well, I think Jason touched upon this. These are issued on public immutable ledgers, and so you don't want to do anything nefarious, right? Yet regulators are extremely afraid of it. So possibly a bit of more understanding around it, and maybe governance around it, or setting parameters around it that give institutions and regulators more comfort. For example, I know as a stablecoin issuer, you're subject to audits, right? They're periodic audits.
Twice a month.
Twice a month. Twice a month. Twice a month.
Twice a month.
But, because these are publicly available, could you maybe do a real-time attestation? Something like that. Introduce concepts that give people who are using stablecoins and people who are regulating stablecoins more comfort. That's one idea. Obviously, as represented here, there's a lot of licenses here, right? So how do you build trust? Most of us want to do things the right way. We want to be regulated and we want to comply. But you need to give us, the proper framework, clear guidance, and licenses to do that. So I think it's all coming. Licenses are coming. Clarity's coming. Clarity Act. But there are some specific examples that you can give.
Yeah, maybe just add on that point. I think, again, this is something that I just talked about in the early part of this whole conversation, that public-private consultation is something that at least Mars has been doing quite a bit. Actually, on that track, we just talk about, we have talked about two different kind of topics here, right? One is about what is the underlying assets and the kind of classification of regulated stablecoin. What is the underlying material, the audits, the financial fragility, the board governance, and all those processes that's been there. We're doing it twice a month right now, but like I said, there are technologies that we're talking about with tokenized deposit. Potentially, these will go into on-chain attestation, which automatically can be done real time. So there's a track that's on that. But at the same time, I think what Jason and Eric are talking about now was the AML side of this thing, where we are touching tainted funds and stuff. And this is something that MES has really been pushing this for quite a while right now. There's this concept called Global Layer 1. Initially, we were all talking about it from a framework perspective that this might be actually a fundamental blockchain that they will release on their own. But where this thing has been steering so far here is trying to get to a consensus, like what exactly is the design of a blockchain or a set of rules that can be implemented that will make this thing kosher across different jurisdictions itself. It's actually more of a framework and a blueprint than an actually implementation of the blockchain itself, right? So this covers things like the AML controls that we're all discussing, the feasible, whether the kind of transaction you're doing, there's quite a bit of different in risk profile when you're dealing with from a paying of goods and services versus a known unknown or unknown, which is just doing a remittance to pay for invoices. The size of the tickets also make a differences in that itself. And some of these things is where the Turing complete nature of a stablecoin or a blockchain itself have fundamental advantage in trying to solving that. So there is a concept that they push out since about 3 years back as well, and a white paper that we co-write together with them called Purpose-Bound Money, whereby the fact is that, with the compliance requirements we just talked about and a blockchain being Turing complete, you can program fundamentally some of this governance and control right into the smart contracts. So on the transactional level, is compliant by design. So this, of course, takes a few years of work. It has been moving forward. Some of the live things that you see right now is some of the example we launched since 2 years back. Grab, Alipay right now can pay each other, fundamentally running on blockchain, running on this kind of concept of compliant by design. But I think we are now pushing the envelope forward, right? Like there will be more discussion this year under the Project Bloom discussion here. What are the next generation of compliance requirements that's across different jurisdictions? That's why the MES is trying to push for HKMA participation, Bank of Thailand right now is in. We need regulators around the region to all get to a common standing that what exactly is the kind of risk profile they're willing to pallet. And the difficulty part in this is that it's going to be different for different countries, right? Because some countries have currency control, some don't have, others have different AML standards compared to this. So the harmonizing of that will take a while, but I think we are getting there because with the fact that a lot of these things can be programmed onto a smart contract layer, the control of this thing can be decentralized. Yeah.
Yeah, and I was just going to mention, because you mentioned Global Layer 1, which is an MAS-initiated project. It doesn't sound so different from what Circle has launched, which is, a protocol. It's a public permission protocol that requires, the buy-in and acceptance by Circle or maybe the governance board. I don't know how it's actually structured yet as of today to allow you to participate, right? And Global Layer 1 is similar. The difference being this is purely regulator initiated, right? So a lot more perhaps power and force behind that. Another thing I did want to mention is also, to be honest, there has been tremendous developments on the regulatory side. I think there are alignments already in terms of, one-to-one reserves. I think most jurisdictions require that. Segregated assets, which is required. But there could also be other improvements, such as maybe what qualifies and as reserve, and also the concentration limits on those reserves. Because if you have, short-term treasuries versus commercial paper, unsecured corporate debt, it's very different profiles, right, and different risks. So those kinds of harmonization still needs to come.
Yes, that's great. So I'll just quickly touch upon one important topic as well, interoperability. I think that is under quite a lot of discussion, especially in the blockchain space. So I'll bring Pamela into this discussion. So who will actually own the bridge? So you can look at firstly the importance in terms of connecting stablecoins, deposits, maybe CBDCs. How important is that? And who will actually at some point own that bridge?
To understand your question, so I think there are different perspectives to that in terms of the interoperability, right? And I think ultimately we are seeing the idea of convergence here, right, between the different use cases that you mentioned, right? But I think to drive that adoption, which we are seeing, we still need institutions in this place, right? And what I mean is basically those capital markets institutions, like your traditional institutions, for example, like your banks, asset managers, hedge funds, that we are actually seeing a lot of them. And in fact, with this topic, right, stablecoins is actually a good way because it is actually the most easy and straightforward use case for them to actually pilot a lot of these usable frameworks, right? And once stablecoins is actually integrated into their infrastructure, right, into the custody, into their treasury and accounting systems, you can actually easily add a lot of what Alice mentioned, tokenized assets on top of it, right? Because that's just a marginal step because a lot of hard work is already done by that. So we are actually seeing that from a lot of clients where probably they were executing stablecoins like two years ago, right? But now they are moving on to very much advanced use cases, like you mentioned, tokenized assets is one of it, right? And they are figuring out, are we there yet? Probably not. I think it will probably take about two to 3 years, right? But I feel because the infrastructure is there, right? And the real move that we'll see is once a lot of these tokenized assets are being used as collateral, right, to actually allow movement of funds a lot easier between different capital institutions, right? Then I think that's where a lot of these adoptions will come.
Awesome. So guys, I'll open the floor for any questions. Does anyone have a question? Any questions? Okay.
Hello. I attended a workshop recently about the MAS prudential standards for decentralized blockchains, so assets on decentralized blockchains.
Yeah, just speak up a bit. I'm having a hard time trying to hear you. Yeah.
Can you hear me now?
Not really.
Is that better? Can you hear me now? Okay, so I attended a workshop on the MAS prudential standards, the proposed prudential standards for banks holding assets on decentralized ledgers, whatever. How far away does the panel think we are from bank credit using blockchains? So banks using blockchains to issue credit to businesses and individuals, which traditionally has been a source of economic growth. Perhaps it's been a problem recently where private credit has taken over in bank lending, but I mean, more generally, how far away do we think we are from banks actually issuing credit on blockchain rails? And I don't need to differentiate between decentralized permissioned in the question, just generally, because that is a key case for stablecoins going forward once people start getting paid in stablecoins, for example.
Yeah, there's quite a bit. If I understand your question correctly, is how far are we away from banks, getting blockchain-based services roll out? And there's a lot of different layers we're talking about, right? We went all the way to credit, which I think is a bit more complicated. But if you ask me right now, at least more of the local banks and even regional banks have already endeavored into experiment on their own, both initially on permission chain, but most of them have already got to the consensus that they need to support and use a public chain, at least from a stablecoin perspective. That I think will be, this is me making a bold statement. I think within the next 3 to 5 years, most banks will have to accept stablecoin, at least a form of deposit for their clients, or they will be quite obsolete, right? It's like almost telling you that I'm a bank, but I don't accept SWIFT. I think that kind of seismic shift is already happening. The forward-looking banks have already been prepared. Other banks have already started reaching out to a lot of PSP and stuff, discussing about how they can get themselves equipped to at least serve their corporate clients and high net worth individual. So that is already happening. But if you then build on top of that, first, they must have the capability to actually handle these kind of assets, have the internal risk committee be able to classify this. And I think MAS just published also a standard itself, how the stablecoin holdings is a different base structure for their capital requirements. So that will also be the new requirement that they are all now starting to look at, where they want to start allowing their customers to hold stablecoin with them. Because like accepting stablecoin as a form of way to deposit when it convert immediately back to dollar and fiat is quite different from I'm helping my client hold on to a stablecoin asset, which I may or may not be able to lend out, right? So that itself, I think, is still a work in progress. That's probably what you're getting to. And that, I think, is already at least undertook by most of the major banks, at least in Singapore. And I would say it's probably going to be the same thing for in the region around it.
Yeah, maybe on one thing is for banks outside of the US, it is incredibly expensive from a capital requirement to hold any kind of digital asset, including stablecoin. So we need this to change, and that's going to take a while.
And that's what we're saying. The MAS has basically published a standard that allows that adjustment to happen just, I think, a week ago or 2 weeks ago. Yeah.
If I can share just some of the use cases that we've seen, right? And I think you mentioned a very good point here. It's credit, right? So what we are seeing is actually banks are using stable coins as a form of on-ramp, right? And once that is being on-ramp, they actually deploy it into tokenized products. And when I mean tokenized products, we actually see it a lot in the markets right now, like your BlackRock Builder Fund, right? That's one of it. That's your Franklin Templeton Benji. There's also your UMIN from UBS, right? And why are they doing so, right? You might ask, right? The reason behind here is all about collateral efficiency, because when banks, they are actually running their own balance sheet, right? And if I want to do loans, I want to do structured products and things like this, if I were to do it in my traditional way, it actually takes up to days for collateral between banks, right, to actually receive. But if I can do it in the form of tokenized treasuries, T-bills, right, and a very common term that we are sitting on a pilot with DTCC these days is tokenized repo, right? If you know, repo is actually the short-term funding for a lot of the capital markets, and all of this allow them to deploy their treasuries instantly, right, to allow them to get more credits, swapping between banks, things like this. And that's really some of the pilot use cases that we've seen nowadays.
If I may just add from an operator practitioner standpoint, because we're seeing this live daily in our operations. You talked about Franklin Templeton Benji. We have launched that on our platform. They will not accept stable coins at the moment because they're not allowed to under MAS current guidelines. They can do it in the US. Again, coming back to that harmonization. So it creates serious friction. We have tokenized assets on the one hand, but they only want to take fiat. No one's going to take up that product, right? So we need to resolve that disconnect clearly before the adoption takes off. Same thing with some of these other products. I won't mention names. There are some banks that have launched tokenized structured products, notes, things like that. They don't take stable coins. They don't take on-chain funds, right? And so that creates real friction. And that's what we're trying to solve. And so it's going to be demand-driven. There's a lot of demand because, again, going back to what I talked about, from the regulatory standpoint, stablecoins, as far as I'm concerned, are not allowed to have native yield. Where is that yield going to come from if you're holding onto stables? From real-world assets, tokenized assets. It needs to go into real use cases, not, yeah, so again.
Awesome. Jason, have you got anything to add to that, being from a digital bank?
I mean, I think the panel covered everything pretty well. I think one of the things that's very interesting to me, though, is someone who's been in the space for quite some time, is I'm having a bit of a PTSD crisis in seeing a bunch of these permissioned or semi-permissioned blockchains being very well funded across the world, because we've already seen an entire cycle of this in like 2018 after the ICO boom and crash. These all failed spectacularly because what happens is these institutions think, oh yes, we should go on chain and we should gain the efficiencies of being on chain, but then they realize, oh wait, we're all in our own walled gardens, and then they don't talk to each other, so then basically these all fell flat. So I think, I mean, maybe this is the like the public permissioned maximalism in me, but I do think like a global settlement layer needs to be public, although with maybe programmability, which is available even today to abide by certain regulatory standards or or laws in different jurisdictions. So to me, I think that's the future, and I think, as you said, I think people are institutions and banks are going to be forced to integrate this, and it will be customer demand driven for sure.
Yes. Awesome, guys. So I think we are done with time and so on. So huge thanks to our panelists, Jason, Eric, Alice, Tianwei, and Pamela. Thank you very much for joining, and to the audience as well. You could meet our panelists once the session is done as well, if you have any questions and so on as well. So thanks, guys. Have a great rest of the day as well.
Thank you. Thank you.
Thank you.